Hey everybody, good evening or good day to you. Good day, mates. Um, Welcome to the Financial Thing live stream. It's Thursday, May 30th. Can you believe we are almost at the midpoint of the year? It's crazy how fast time goes nowadays, but thank you everybody for joining. If you didn't get to watch the Q&A session we had last week with Mike Bristow from Crowd Property, which I thought was really enlightening, go back in the archives and do that. We're going to have other guests upcoming in the future once I get the schedules all sorted out. So keep coming back for the guests. And in the meantime, today or tonight or wherever you are, we're going to be talking about a few different things. We're going to talk some peer-to-peer lending. We are going to talk about what the hell is going on with the Trading 212 account, what's going on with the economy. We're going to talk a little bit of cryptocurrency. We're going to talk about toothpaste because in the mailbag, got a couple of interesting emails over the last couple of weeks, which I wanted to bring in to light. This stream is not always just about peer-to-peer lending. I think that would get a little bit boring if it was. I think it's really interesting to touch on other things that are going on in the world and in the financial industry. And why toothpaste? I mean, because, I think health and wellness is important, right? Without our health, we have absolutely nothing. So we have to keep an eye on our health and what we do. So, hell, I'm going to talk about that too. But quick word, quick shout out, quick hello to our sponsor, Cufflink. I don't know why this graphic is not updated, but it's supposed to. Anyway, it's supposed to say up to 9.83% gross per annum. You know what? I'm going to put up the correct graphic. I don't know why. I've tried to get this thing to refresh, and for some reason it does not. So just bear with me a second. So I want to show you the correct information. We don't want the FCA getting on our case either about presenting incorrect information. Check this out. This is the correct information. You can earn up to 10.25% now, gross per annum, over 330 million pounds of money invested. I don't know why it says of invested, because it's 330 million invested since 2016 with zero investor losses to date. Your capital is at risk. Please don't invest unless you're prepared to lose money. Remember, these investments are not FSCS protected. Please check the rates on Cufflink's website, as interest rates do change. Right now it's 10.25% on a 1 year on the auto invest product. You can sign up at join.cufflink.com/financial-thing. There is a link in the description below. Thank you to Cufflink for supporting and continuing to support this stream. Without them, I don't know if this stream would actually be possible. So there you go. Go check them out. In any case, quick hello to everybody who's watching now live and watching in the future. Harley, the dog, is there. She's having a quick snooze. Hopefully she will learn something about finances while she sleeps. I find that fascinating. Dogs can sleep so much, but apparently they have the vocabulary of a 2 or 3-year-old child. So amazing. Let's see who's in the stream tonight. We've got a sweltering Cayman Island lionfish hunting. Had a great morning here with snorkeling with the green turtle. Wow, yeah, it is very hot. I know the Cayman Islands pretty much has the same type of climate that we do here in Orlando, but it's been in the high or in the 30s for a while. It's very hot for this time of year. Climate change, huh? Peter Vince is in a very soggy leatherhead. Sorry to hear that. HW from George Batchelor. Hello, George. Paul New in Stockport. George is in Bridlington. Another wet day. Paul Bagworth in Kenilworth. Stephen Howell in Nottingham. And John Day also follows up with the Nottingham shout out. You guys must be in the same room because you're always in unison. So welcome to everybody, John and Stephen in Nottingham. It's good to see you. Thank you for joining. I'm going to share some really important I think, information with you tonight about opportunities and really opening the mind to what is possible. So bear with me. I think it's going to be an informative stream. But first, let's go ahead and check in to LoanPad and see what they're up to. I always like to look at this dashboard. I think it's really super informative. 173 million pounds of total loan value, 83 million in partner loans, 90 million in total LoanPad loans, LTV, loan to value of just 41% with 223 loans. They just continue to keep going on the correct path. As far as I can tell, estimated time to sell 1 day, estimated time to invest 1 day, 17 lending partners. Nothing really happening with the interest coverage fund, which is just a minuscule fund compared to the actual total amount of loans, so nothing seems to be going awry. And look at this, total loans since its inception, 257 million and 453 million pounds of loans repaid since inception, 2019, that is. And it's pretty amazing that they've been able to grow that much since 2019, because that's 5 years. Imagine 200 and close to 260 million pounds of LoanPad loans in just 5 years. I think it's impressive, and I think they're continuing to do good things. We did have an update to a 2014 investor update, which LoanPad sent out recently, and they are saying here that 220 loans in the portfolio, average loan represents 0.45% of any funds invested. So that means that automatic diversification, your money's not going heavily into any single one loan, just 0.45% into each loan. Total value of all loans in the portfolio is 173 million, which LoanPad investors have invested about 90 million. Currently 17 lending partners with others to be added. Loan repayments continue to meet expectations, and our origination capacity for new loans continues to grow, allowing us to select loans from a growing list of partners. Remember, they talk about ISA. Now we're in the new ISA tax year if you want to open up an ISA. So good information there if you sign up for a LoanPad account. You're going to get that newsletter if you opt in. I think it's good stuff. Let's have a look what else we got. Administrative report. The Funding Secure Administration report, which was sent out recently, dated the 20th, I think it was the 23rd or 24th of May that I received this. And this is for the period of the 23rd of October 2023 to the 22nd of April 2024. Of course, for anybody that has been hiding under a rock, Funding Secure, the United Kingdom P2P lending company that has gone into administration because they've been naughty and not handled their business correctly. So, interestingly, I haven't really read this whole thing in its entirety, but I do look at a couple of important things. So, under the loan book during the period, so this would be, again, October the 23rd, 2023 till the 22nd of April, so a 6-month period. Total loans, redemptions, so realizations gross, that means the amount of loans that have been paid back during that period, 1.495 million. So that does mean that money is continuing to come back in, which is a good thing. To date, total gross loan realizations amount to 50.2 million pounds. So not the best case scenario, but certainly not the worst. It's certainly a lot better than the collateral realizations, which I think are going to be worse than that. There is also an issue going on there with they call it a quist close trust claim, which I will talk about. It's a little bit close to about £500,000. So I'm going to talk a little bit about that and what's going on. You can see here some information about it. We have previously updated investors as to the claim made by JC Star Holdings against the company of Funding Secure. JC Star issued its claim in the High Court on the 6th of September 2023. JC Star is asserting a proprietary interest in the sum of £499,985, that is disputed money, which the joint administrators are currently treating as belonging to the investors. Funding Secure itself does not assert any interest in the disputed money. It either belongs to the investors or to JC Star, and this will go to a court decision. On the 4th of April 2024, Paul Mundy applied to the High Court for an order that he will be appointed as representative party of the investors in order to defend the claim brought by JC Star. Mr. Mundy is a member of the company's credit committee. So to represent basically investors, Paul Mundy is going ahead and has asked that he be appointed to represent the investors to defend this claim, because the administrator is not going to defend the claim. They're going to allow the credit committee representative to do that, which is really unfortunate in some ways, because unfortunately, when it comes to legals and lawsuits, you really have to defend yourself, which costs money. Who's going to have to pay for that? Well, it's going to come out of the investors' pockets at the end of the day. But unfortunately, if you don't defend against it, then JC Star walks off with close to about £500,000. So it really is a lose-lose situation for everybody except the solicitors, who tend to make a tidy sum off this is where they make money in their businesses, which, be that as it may. So let's read a little bit more on this. A High Court hearing was held before Deputy Judge Hassel on the 19th of April. At the hearing, Mr. Mundy's application to be appointed as the representatives of the investors was accepted by the judge. So Paul Mundy will be the representative of the investors. This is where it gets interesting. Mr. Mundy has also applied for an order that he be indemnified by the investors. The investors are to pay his legal fees. The company's barrister suggested to the judge that Mr. Mundy's legal fees be subject to a cap. So this would have been, when it says the companies, I'm thinking that is Funding Secure. But they suggest, I think that's right. No, never mind, sorry, that is JC Star, I believe. Says about the company, maybe JC Star. No, I think the company is actually Funding Secure. I'm getting mixed up because it doesn't really state. I'm sure it states somewhere in this document. But anyway, the company's barrister suggested to the judge that Mr. Mundy's legal fees be subject to a cap to ensure that they do not exceed the amount of JC Star's claim. I think that's a fair point, because if you get involved in a legal battle, you end up spending more than £500,000 in legal fees, and the whole thing is just a waste of time. Now, Mr. Mundy's barrister opposed that suggestion, and the judge agreed with Mr. Mundy's barrister that there should be absolutely no cap on legal fees. The court has therefore ordered Mr. Mundy's legal fees to be paid by the investors out of funds currently held by Funding Secure and the joint administrator for the investors, but subject to what is called a detailed assessment by the court. So basically they want to know how much the legal fees are and exactly what those fees are for. And then it goes on to talk about exactly how much this is actually costing to go to court. So you can see right here, prior to the hearing on the 19th of April, Mr. Mundy filed a statement of seeking costs of £53,094. That is for the 6th of February to the April 18th, which is about $22,000 a month. Yeah, so you can imagine if this thing drags on for 6 months to a year, it's going to be quite costly. And I think there's other legal fees too that will come out of this. So we'll see what happens. I think it is important to defend against that claim. You just can't have people coming in and winning cases like that, because it really does hurt the investors. And I think it's really good that Mr. Mundy has stepped up and wanting, and also the credit committee for the Funding Secure, I believe it's the action group. They're looking out for the investors' best interests, And unfortunately, it does cost money, but I think it's really the only way to go at the end of the day. So I fully support that decision myself. Let's see. Continuing on with this, currently there are 52 remaining defaulted loans. So this thing, I mean, this administration is just going on and on and on and on. That is a total capital outstanding of 10.6 million. So you can imagine if they're getting about a million for in the last 6 months, going just on that basis, on a basic math premise, this thing's going to take another 7 years to wrap up, which is going to mean even higher fees to the administrator. They've got funds held in a client account and e-wallet connected to the platform, which amount to 1.97 million pounds. They've got investors' withdrawals of 2.8 million. Total investor withdrawals amount to 33.5 million. So money is coming out. They're getting bank interest, 133,818. So they've gotten 351,644 pounds in interest. If we look at, let's have a look and see what the fees are for this 6-month period. This is what I always find interesting. You can go down to the receipts down here and just kind of see what is going on. They list everything here. So if you're interested in that kind of thing, I think it's important. We got salaries. This is the total on the right side, and this is for the period. So 17,000 pounds in salaries. I think they only have one salaried person and a helper right now. Got a consultancy fee of 21,000 pounds. And these are all the expenses that go along with it. 102,000 in insolvency costs and expenses. We got legal costs of almost 78,500. So yeah, it just really continues to add up. You got irrecoverable VAT, corporation tax, and it just gets expensive, right? These fees just don't get any smaller. And yeah, if it continues on for another 5, 6, 7 years, it is really going to take a big bite out of what funding secure investors are expected to get back. In more positive news, Shojin has expanded their team by 6 people to support global growth. So you can see these are the new, let's see, 1, 2, 3, 4, 5, 6 people right there in that picture. They're very diverse set of people. And remember, Shojin, now you can invest for £1,000 into a loan, which has been reduced from the 5,000. So Shojin continues to grow in a positive manner. There is Karat, Jackie, Thanuja, Hugo, Meenal, and James. So those have been added. Mr. Ondia, who's the head of Shojin, has said. Continuing on, now last week we spoke quite in depth to Mike from Crowd Property about defaults and some of the concerns that investors had about Crowd Property defaults and late loans. So there was an article in the Alternative Credit Investor by Catherine Gore which says peer-to-peer lenders dismiss default concerns. Default rates will remain stable throughout 2024 despite concerns about the economy. Peer-to-peer lending platforms are predicted. So they're saying that default rates will remain stable. The UK slipped into recession during the fourth quarter of 2023, sparking concerns that borrowers may be unable to keep up with their payments. However, a number of peer-to-peer leaders have said that their default rates should remain relatively stable this year. This economic environment is not new, says Paul Sonnabend, executive chairman at Relendex. We've been exercising extreme caution in making loans ever since 2020. As such, we anticipated the issues and have considerable headroom to cover delays in construction and sales. As house prices have grown, over the period our developers have been selling at or above original valuations. We anticipate a small increase in crystallized losses this year. However, ironically, these relate to loans made prior to 2020. Overall, our loss ratio will have declined as a percentage of our loan book. Narinder Kaur, chief executive of Cufflink, said that the key for lenders is to build strong relationships with their borrowers to get an early understanding of challenges that are experienced when moving towards repayment. We encourage our borrowers to start working on their exit no later than 3 months before their exit date and have a network of broker contacts we can share with them if they need assistance with this. And then we have Rishi Zaveri, chief executive of Lendwise, noted the P2P platforms are well placed to weather the economic storm. The expected election does bring an element of the unknown, but defaults should remain stable as long as the action to address these is taken promptly. Now, you would expect that peer-to-peer lending companies are going to respond to an article titled like that in a positive manner. It wouldn't certainly do them any good to be declaring doomsday on defaults. But I think a lot of the information they're providing is actually really accurate. But I do think there's certainly some problems within the economy that we can look at and try to pinpoint if those defaults are actually really going to be more problematic than some of these peer-to-peer companies are forecasting. Folk2Folk has reported a 5th consecutive year of profitability. And there's Roy Warren right there, who of course we've had on the stream and hope to have him back too. Folk2Folk has reported a pre-tax profit of $1.28 million in its latest financial year. That's its 5th consecutive annual profit to date. This compares with a profit of $1.37 million during the last 12 months previous. According to documents with Companies House, the slight dip in profits may be down to a year-on-year rise in administration expenses, which is $400,000 more. The peer-to-peer lending platform posted a revenue of $5.28 million in the 12 months ending the 31st of January 2023, down 6.9% year-on-year from $4.94 million. So, I mean, that's anytime you can see a peer-to-peer lending company making $1.2 million profit in a year is a really, really positive sign. I see that as very bullish, and Folk2Folk seems to be heading upwards in the trend. Now, this week, actually today, I don't often talk about this because honestly, over the last, I don't know how many months, I haven't really been putting any more money into my peer-to-peer lending investments. But today I did make an investment, which I'm going to show you. It's a small one. Well, I mean, to me, not so small, but to other people, maybe small. I decided for the first time, and I've never done this before, to put some money into Cufflink's 1-year product at 10.25%. I think that rate is just so attractive that I wanted to put some money in. So it's a 12-year rate, 10.25%. You get paid at the end. So I shoved 500 pounds in there. I had 500 pounds sitting around. And just to show you that I do actually invest too. Not always, but when I see a good opportunity. So not financial advice, but that's a pretty good rate. And you don't have to do anything to manage that investment. You just leave it alone. Hopefully at the end of the 12 months, things go well. And the 500 will return about 550, 558, something like that. So I'll keep you posted. Yeah, but some money went into Cufflink today. Okay, we're going to talk about trading 212. I want to kind of address something that's been on my mind about opportunity. And it kind of goes along with a letter that I received on email asking about investing and, you know, where to put money. But I want to show you how the portfolio is doing. It's my pet project right here. Okay, here we are. Right now we're sitting at 20,930 pounds and 60p. So, I mean, if you imagine this portfolio is down to around 18,500 not too long ago. So it's really seen a good uptick from a couple of the investments that have been made. Coinbase plus 52%. I am a big believer in the path of what Bitcoin is going to take, and I'm going to share some of that with you. The reasons why. I know some of you don't like Bitcoin, you don't believe in it, but opportunity is there. And again, not financial advice, but I want to show you this opportunity and why I continue to believe this opportunity exists and is really ready for the taking. But anyway, aside of that, the Coinbase shares, I mean, if Bitcoin does well, Coinbase is going to do well. And right now they're doing well. What I did with this Bitcoin investment is, with the Coinbase, was I sold at 209 when I saw things starting to fall out. You can see right here, this 1,800 pound, we sold, took the profit. There's the price of the share was at 209.41. I don't know if you can see that here at the fill price of the sale. And then I watched these Coinbase shares rise up again and then come back down, which was really what I was looking for with the Coinbase shares. I decided, if they dip back down again, I'm gonna take another nibble, which I did on the 13th of May at $203 right there, entry point. Didn't make a huge investment, but enough to where I was comfortable, so that has paid off quite well. Creative Realities has just kind of been bouncing up and down. You see, blah blah, it's not really done much since this 18th of March hop up to $4.28, and then just this actually sink back down to $3, where I did buy some more at that $3 point down there. It's actually a really good stock if you're, and I never recommend trading, but that volatility of the up and down 5 to 10%, which we seem to see almost daily, is a really quite an attractive stock to trade. And then here we have NVIDIA, right, which I saw somebody posted in the Facebook group about NVIDIA and what I had done with that. So you can see here I started to have a nibble on the 16th of May, 17th of May, and the 21st of May. And the theory was really simple. And this is why I talk about opportunities. Opportunities are there. I am not a stock trader. I don't study more than probably what your average person who's somewhat knowledgeable on stock studies. I'm not looking at technical charts all that much. I skim over it. I read the news, and I use basic common sense. And basic common sense told me about NVIDIA that they were going to have a really good earnings report because AI is the rage right now. It's all over the news. NVIDIA is selling massive amounts of chips. I just couldn't see how NVIDIA was going to have a bad earnings report. And there's the opportunity. You buy in at an average of, what was the average? $937, 738 pounds. Now the current price sits at $1,129. We've made a profit of 20% in just a short period of time. And then there's also going to be a stock split. So you're going to get 10 for 1, I believe, is what it's going to split out to. So this price these shares will be cut from whatever the price is. Let's say today, $1,130 down, it will become $113. Not really make any difference to a lot of people that buy fractional shares, but it's a more of a emotional thing. If you see a stock at $113, I think people will buy it, right? Versus a stock of $1,000, which some brokerages still don't offer fractional share purchases, so I can understand that. Trading 212 does, but yeah, you can see a nice little jump up there, which again helps everybody. It helps the portfolio. I get to donate more money to charity the better the portfolio does. So that has been doing really well. I don't plan on getting rid of these unless some crazy news comes out about NVIDIA. So I'm just going to hold on to those for now. And then Rivian is making a bit of a bounce back. You can see $11.10. We've been down as low as $8.40. So I think the electric car market is going to have some real struggles because of infrastructure problems, but we'll see if that changes. I think this probably, looking back, wasn't a very good play. And probably I'd say if by the end of the tax year this hasn't really done too much, that'll be a one that gets cut loose and take that tax negative loss. Because, sometimes you got to go with faster moving assets, and this one just doesn't seem to be doing it. Valco Energy's up about 39%, so that's still performing well. So we're a hair under 21,000 pounds on the portfolio, which started out at 5,500 a few years ago, so it's done pretty good. Again, this NVIDIA opportunity was just, I think, plain sight of everybody, but a lot of people said, oh, the stock price is too high. I'm not going to put in $900 on a stock for NVIDIA. It's too high, and look what happens. Not to say that can't come down. Of course, it's the stock market. Anything can happen. But this whole thing about opportunity, and I'm just going to show you this email that I got here, because I do want to talk about this, and I think it's really important. I actually came through right before the stream today. Actually, funnily enough, that was good timing. Anyway, it says it was from Sarah. It came through at 2:09 p.m. my time, so right before, and it was actually what I wanted to talk about today. It was really good timing that it came through. Just want to say thank you for the videos you put out on a weekly basis. You're welcome. They've been really helpful. I had a question about Bitcoin. Are you still a believer? I've been researching the monetary system, and it is becoming more apparent to me how much of a scam it really is. I still like peer-to-peer, some of it anyway, but I want to allocate some money out of the pound, and I'm considering Bitcoin as an option. Would love to hear your thoughts. Sarah P. Thank you, Sarah. It's a great question. We had a announcement this past week about a new ETF that was going to be released. I believe it will be released before the end of July, if I had to take a guess. And it was quite surprising. It was the Ethereum ETF. I didn't think it was going to happen so quickly, but the Ethereum ETF got approved in the US by the SEC, and which is going to mean that, and I know you can't buy this in the US, in the UK at the moment. I think that was going to change. I think you'll be able to buy these ETFs, the Bitcoin ETFs and the Ethereum ETFs, but it is going to change the way that the retail community is able to, number one, to access these cryptocurrencies. Not all of them are good. Of course, 99% of them are really terrible and probably end up going to zero. There's a case that the two big ones will be okay. I don't know for sure. But to address what Sarah was asking, am I a believer? Yes, I'm still a believer. I didn't talk about Bitcoin for a while because it was, obviously going through this period of a lull where the prices were going downwards. I've never sold any of it. I've been buying Bitcoin since 2016. When I finally understood more about it, and when it was first presented to me in 2014 by a friend of mine who insisted that I buy some, and I said no, it'd be like throwing money down the toilet. I didn't want to do it because I didn't really understand anything about the monetary system. But to answer your question, Sarah, yes, I'm actually a believer of Bitcoin because it presents an opportunity. I think that these opportunities don't come along very often. I mean, once or twice in a lifetime do you get an opportunity to really enter into something that could really change everything. Right? If we look at the Bitcoin price right now, 69,274. It's a volatile product. It's always been volatile. I mean, volatility is your friend when it comes to investing because you certainly are not going to make any money out of a non-volatile investment vehicle like a savings account. But you can see it's really kind of held its own. It's kind of approaching that all-time high right now of 72,000. So we're not quite there yet. I think that comes before not too long. We have an election in the US, which I think is going to help this case. But one thing I wanted to point out is there are some people that believe that Bitcoin will become an actual monetary item that is used by countries. Now, I don't know if that's going to happen or not. It's a very, very speculative thing to suggest. But what I will say is, remember the Deutschmark, and remember the pesetas, and remember the drachma. Now, if you just said 70, 80 years ago that those currencies would no longer exist, I think the people that lived in those countries would have told you absolutely crazy to think that. Nobody ever thought that the pesetas was going to disappear from the Spain economy. And what happened was we got the euro, right? The euro came in. These are the countries that use the euro right now. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, and 21 countries now using this single economic currency that is still controlled by the central bank that also says Bitcoin is evil and bad. We've got non-euro area member countries now also using the euro. Bulgaria, Czechia, Hungary, Poland, Romania, and Sweden. And one EU country that has opted out of euro using the euro, and that was Denmark. And of course, the UK never adopted the euro for its own economic reasons, and then eventually opted out of the EU completely. Now, again, if you'd have thought this was going to happen 50 years ago, everybody would have told you it was absolutely crazy, right? We saw events in the world that looked like they could never happen, like a war, the World War II. So to say that there is absolutely no possibility that one day countries of the world could not adopt this digital currency as something that could be used throughout the world would be very short-sighted, because it could happen. Do I know if it's going to happen? Of course not. We don't know. But we do have some countries that are starting to really look at Bitcoin and say, well, this is something we can hold as a treasury to really combat the loss of the deflating currencies that we're experiencing, like El Salvador and also now Argentina. It's very interesting. We have a lot of economic challenges going on in the world right now. If we look at the UK, this release of the UK House of Commons Library is trying to make a very positive outlook on something that I think is obviously problematic. And they're talking about inflation, right? Look at this headline. Inflation falls to nearly its target level. 2.3% in April. So that means that from April the year before, prices have gone up on average when we take all of the data, and we're talking about all these different categories right here: food and drink, alcohol and tobacco, clothing and footwear, health, transport, housing, furniture, blah, blah, blah. We average it all together. It's, better than it was, right? We had inflation right here at almost 11, crazy amount of inflation, 11%. We can see how it's dropped down. Now they're saying inflation is forecast to rise again. But they're putting a very positive spin on this, showing, look, we're going to get back to this 2%. We're going to hold there. I personally think that we're going to see more of a uptick like this, right? Where it goes back to this 4% level. You can also see here that's minus 4.9% housing, water, and energy. So those things have gone down, but food and drink has gone up almost 3%, clothing and footwear 3.7%. Look at this health cost, healthcare 6.7%, restaurants and hotels 6%. So everything is costing more money. Everything is costing more money, and this is happening in different places in the world. So having your money sat in a fiat currency like the British pound or the US dollar is obviously a problem, because what happens when those interest rates the banks are offering starts to fall down, which is probably going to happen at some point. In fact, I got an email this morning. I said, we're lowering the interest rate on your online savings account. This is Marcus Bank and Saga. Look how much they're lowering. Currently 4.2% AER. By the way, if you don't know what AER is, that is the annual equivalent rate. So AER, 4.15% gross, is now being lowered to 3.96% gross. So we're starting to see those those high 3% interest rates on savings accounts come in now. But yet the Bank of England rate is still unchanged at 5.25%. So we're seeing a level of greed there from some of these banking offerings, where the interest rates are not very good compared to the Bank of England rates. But as interest rates start to come down, your money is just not going to really turn over as much interest, and inflation eventually eats up everything. So if we can assume that the base rate of inflation from now on, which I think is going to be about 4%, will continue to be like that for the next 10 years, that means in 10 years, things will become 40% more expensive, yet your pound is not really doing anything. It's not gaining you any traction at all, and things are becoming more expensive. Look at cars, look at food. I know that you all out there are feeling the pinch. I certainly see it when I go to the supermarket, how much everything costs more. Cars cost more, petrol costs more, flying on a plane costs more. Everything is more expensive. So having the money sitting in this currency of the pound or the dollar and having it just eaten away is a problem. Now, what do you do with that money? Of course, you have to try to find ways to gain yield on your money. And I think what happens is interest rates start to drop down. People have become more reliant on things like savings accounts, are going to take that money out of the savings account, feel like they're going to have to take more risk, whether that's investing in the stock market or in other assets. Some may say gold, which has had a pretty good run recently. But you got to take that money out of the currency that is deflating down and losing value to put it into other things. Let's look at a couple of other important economic indicators which show us the state of the economy. We've had a really bad debt problem. This is in the UK. You can see this is the household debt as a percentage of disposable income. So back in Q3 of 2008 in the UK, household debt was 156% of household disposable income. So imagine that. You were bringing in £1 of income, but you owed £1 and 56p of debt. And now it's declined a little bit, but it's still 134.6% into early 2016. Now we're looking at 123.7% in quarter four of 2023. So still obviously a problem. This is a debt problem. People are in debt in the UK. Everything is costing more money. Look at this is the price of a Hershey's chocolate bar. Back in 1908, you could buy multiple Hershey's chocolate bars. They were, I think, 3 pennies or something like that for $1. And now, this was in 2012, it was a little bit less than $1, but now look at the price, $2.50. So that chocolate bar has gone up in price so much, but your wages haven't. Your wages have not met the increases of how this chocolate bar has increased. We can look at the debt issues that are happening in the U.S. I always go back to the U.S. because I think the U.S. is a good barometer of the world economy, and what happens in the U.S. tends to really ripple through the rest of the world. We can see here, this is the center for the microeconomic data, which is the New York Fed. And they're reporting what they want to report, but this is not good news. Household debt climbs to $17.69 trillion in the first quarter of 2024. And delinquency rates rise again. I mean, put your mind around that. Total household debt rose by $184 billion US dollars to $17.69 trillion. This is the amount that Americans owe to other people. $17.69 trillion. Look at that. You see how that debt is rising? That is an indicator of problems to come. You're not going to get away from that. Household debt rose by $184 billion in Q1. Delinquency transition rates increased across all debt types. This is a very interesting graph here. This is a transition into delinquency. So basically it means that somebody's been paying on their loans okay, and then they're transitioning into becoming defaulted. And you can see these numbers are starting to rise, particularly on auto loans and credit cards, which are really good barometers of debt issues. Auto loans become a huge problem in the not only in the UK but in the US also, and credit cards now you start to see spikes. Now look at the financial crisis of '08. They're up here, not that much less than what we're seeing right now. Why are student loans starting to come down? Because the president of the U.S. forgave a lot of them. You can see also mortgages. We don't have the problem that we had in '08 with the mortgage defaults, but you can see that also starting to rise. I think that's a little bit alarming, just a little bit under 4% now. So we see definitely economic problems happening in the US. Inflation, I think, continues to be a bit of a sticky problem. So if we look at what is going on in the world of Bitcoin, we had an ETF that was now Goldman Sachs has been saying was an astonishing success. This was an article published on May the 30th, so very recent. Just to give you an idea of what is going on with these Bitcoin ETFs that have been very recently launched in just January of 2024. So we're not even now a little bit over 4 months in. We have over 59 billion US dollars of investments that have gone into these US ETFs and 69 billion globally. We've got Canada, Germany, Switzerland, Hong Kong, Brazil, a lot of different ETFs throughout the world, not in the UK yet, but I believe absolutely is coming. Assets under management now, BlackRock 19 billion, Fidelity 11 billion. So the money is flowing into these ETFs, and as things become more legitimized with what is going on in the cryptocurrency world, you're going to see more and more money coming into these stores of value. Now, owning an ETF is not really ideal because you don't own the actual Bitcoin itself, but it's better to have that than nothing. And it does provide a really good sense of liquidity. It means you don't have to leave your investment on an investment platform like Coinbase. If something happens to Coinbase or Binance, like it did with FTX, your money can disappear. So it does provide sort of this safety net of having that. And there are some tax advantages too if you're able in the future to buy these in a tax advantaged account like an ISA. It's going to provide a nice uplift. But right now, there's a lot of money that's going into these ETFs. You can see it started out around 66,000 in this BlackRock amount of Bitcoin that was in January the 31st, now to over 287,000 Bitcoins that's held in that ETF. So when people buy shares in that ETF, BlackRock has to actually purchase the real physical Bitcoin that gets custodied by Coinbase. So that's how much actual Bitcoin that is in that BlackRock ETF, 287,000 Bitcoins, and that's going to continue to increase. You can see here, it's a piece of news, Bitcoin ETF blowout wows even BlackRock's Larry Fink, who says he's very surprised at how quickly it grew, and he's very bullish on the long-term viability of Bitcoin. He says they're creating a market that has more liquidity, more transparency, and is obviously regulated. He's pleasantly surprised. He would never predicted it before they filed to create this ETF. In other news, and this is why I want to show you why I think the case is there and why I'm very, very positive about what is going to happen and why this opportunity presents itself. This is another company that has announced that it will now hold Bitcoin as a treasury. Semler Scientific in California has announced that they have used $40 million of their US dollars to buy 581 Bitcoins to hold as a treasury. The Semler Scientific chairman says Bitcoin is a major asset with more than $1 trillion of market value. We believe it has unique characteristics as a scarce and finite asset that can serve as a reasonable inflation hedge and safe haven amid global instability. So, I mean, basically what this is saying is that a company like this doesn't want $40 million of cash just sitting around. And instead of investing that, say, in a bond or even in Tesla stock, I don't know what these companies buy, but they'd rather put that money into Bitcoin to hedge against inflation because they believe that in the long run, this asset class is going to continue to go this way, which I do too. I mean, there is no distinct possibility that this thing doesn't continue. I think it's just going to continue to go higher, and maybe you see as countries do adopt this as a form of treasury or currency, that this Bitcoin price continues to really go upwards, maybe to even $1 million. Who knows? We have other companies, other countries too, that are now talking about adoption. So this is a meeting that happened between the National Commission on Digital Assets of El Salvador. This happened between El Salvador and Argentina, who are now considering the success that El Salvador has seen by taking the money out of their currency that was deflating like crazy, and they put it into Bitcoin and now adopted Bitcoin as a legal tender. Everybody said this guy is crazy. El Salvador is an idiot for doing this, but it's paid off really well for them because they've been buying Bitcoin for a couple of years now. Now Argentina is going to, looks like, be jumping on board with this too, and you'll probably see more. And by the way, Argentina has been a successful economy. Recently, they've got the new president, and it's starting to really pull itself out of the dirt because Argentina was a mess. So this is not being seen as a shot in the dark to lift them out of something that's a problem, because they're already starting to lift themselves out before they even were considering this. But now Argentina, I would imagine other South American and struggling other world economies will start to look at Bitcoin as a way to really hedge against inflation that is becoming a massive problem. Let's take a look at gold, because there's always the case where somebody is looking at gold saying, well, I think gold is a better store of value, right? And gold is only worth what people are willing to pay for it. It's a commodity which takes resources to bring out of the ground, kind of like Bitcoin takes resources to make a Bitcoin. It takes electricity, pressure, and mining is what it takes to bring lumps of gold out of the ground. Right now we see gold is an all-time high of $2,344 US dollars. So it's had a big run up. But if you look here from 2011, where you saw this big drop in the gold price, so people who say, well, gold's not volatile, you can look at these charts too and see exactly the volatility of gold. It doesn't look too unsimilar to Bitcoin volatility. If you look at those two charts, of course, much shorter time range on Bitcoin, you see this volatility spike right here from around 1900 all the way down into the 800s, I think, at one point, or 1000. So big loss in value. This is the gold. If you'd have put in $1, $1 US, or you can call it a pound if you want, into gold or Bitcoin over 14.6 years, here's where you would have been. If you just started with a dollar in Bitcoin when it was first released, which, in all fairness, most people wouldn't have done it because they wouldn't have known how to do it. But let's just say you had the insight to do that, you'd be sitting on about a little less than 100 million right now, which is crazy, off of $1. Whereas now gold, you'd have $2. If you put it in a year ago, you could see Bitcoin's price 16,550, gold price 1,803. You'd have 2.5x your Bitcoin and 0.15x your dollar in gold. So you can see it's just been a really good performing asset. There has only been one time where the Bitcoin has underperformed the gold, and that was in 2 years ago, where your $1 Bitcoin would have been worth 89 cents and your gold would have been worth 1.15. But every other time you can just see how Bitcoin as an asset has performed really well. Going to the extreme, if you'd have bought 14 years ago, this is just a crazy statistic. Bitcoin was just 0.0006 of a penny, and gold was $1,000 US for an ounce. Your Bitcoin now will be worth 67,291,000 today, and your gold will be worth $1.92. So that would have been off a $1 investment. If you'd have had the foresight 14 years ago to do that, you'd be an absolute Bitcoin millionaire, but your gold would have almost doubled. So you can see gold versus Bitcoin has not been a very good performing asset. I really like this right here because, people, they ask me, what is the eventual price of Bitcoin going to be? And I think this graphic serves to say that this is the technical analysis on Bitcoin. In other words, nobody really knows. Nobody has any idea what this price finally is going to be. Possibility of it going to zero? Yes, of course. There's always a possibility. Unlikely, I would say. Maybe a 1% chance. So not likely, but yeah, we don't know what the price is going to be. People do try to predict. Now we have this Ethereum ETF that is coming out, and Ethereum right now is priced at about $3,700 for one Ethereum coin. So that had a big bump recently. Let's see if the data pulls up. You can see here we've gone from is that the 1 day? I think that might be the 1 day chart. No, is that a 1 day? I don't know. We've had a pretty big jump. I don't know why this. That's the 1 day chart. Let's look at the 1 month. See here, we've had a jump from 3,000 up to 3,700. Obviously, the news of this ETF coming out has been big news, and that's probably priced in. But this coin, people try to predict also what's going to happen to it. And again, very much more speculative, I think, than Bitcoin. Because it is controlled by a company, but some people believe 15 to 22,500 with this bull market, especially with the ETFs that are going to be coming out in the next few months. We should see big money going into these ETFs. So again, it presents opportunity, even if you don't necessarily believe in the actual commodity, if you want to call it a commodity itself. There's big opportunities there, I think, if you're willing to take a little bit of risk. One thing I will say, the banks, they hate cryptocurrency. I have had so many phone calls with Barclays trying to get money out of the bank to buy whatever I want to buy. By the way, if you like this stream, please hit the thumbs up. Even if you don't like it, hit the thumbs up. It helps out a lot. But yeah, there's times where I want to put a little bit of money into Bitcoin or whatever. And every single time I have a problem with Barclays Bank, I'm going to call you out, Barclays. They flagged the transaction because everything to do with crypto they believe is a scam. But really what it boils down to is Barclays wants to make it very difficult to get your money out of the bank to buy what you want to buy. And I've had this problem too, transferring money, even just a Wise to make a currency exchange. They make it very difficult to get your money out because they don't want you to move your money. They want you to keep it there and pay you 1.6% in interest. That's smart for the bank to do. If they make it difficult for you, you kind of give up at the end. But I did see a interesting post on Twitter which really summed up my experiences about trying to do what I'd like to do with my own money, which the bank should never stop. Her name is Alexandra Huck. She said, my bank would try to block every single transaction to crypto exchanges, even as little as £1,000. For them to release the funds, I would have to phone them, explain that I want to buy Bitcoin and my reasons behind it. And they would say, you do know you could lose all your money. How much do you know about cryptocurrency? Are you aware of all the risks involved? Meanwhile, they offered me a £30,000 limit on credit cards at 33.9% APR. Sure, let people spiral into debt and make 34% off them, but call buying the best performing asset of the past decade risky, and a clown emoji. I think that really sums up my experience and my feelings about the banks in general, and how they do try to stop you from doing things that they don't think is the right thing to do, whether you're or not. Basically, you should be allowed to do whatever you want with your money. A bank should never be able to tell you, no, you can't do that. I think that's wrong. Anyway, just to summarize, so in answer to Sarah's question, yes, I am still a big believer in Bitcoin. I do make every opportunity I can to get my money out of the pound, whether it's into Bitcoin or into an index tracker or anything, just not to have it sitting in something that gets absolutely eaten away by inflation and will become worth nothing at some point, I do believe. Opportunities are there. You just kind of have to open your eyes, and you have to try to understand what it is that you're buying into and what the theory and thesis is behind it. And so the opportunity is there. Make of that what you will. I did get one other, moving on. Toothpaste question. This is kind of like, whoa, this is weird, but it said, hello, Lawrence. Totally non-related financial question. But I've been looking into the bad effects of fluoride, and I know you mentioned in a video a fluoride-free toothpaste you use. Can you tell me what it is? I'd like to go fluoride-free. Thanks, Jonathan and Kent. Well, Jonathan, this is going to be a conspiracy theory, but I think the some of the stuff in toothpaste is really bad for you. We've been taught that fluoride is good for us, and there's plenty of studies out there which will show you, if you look and do some Googling, that might not be the case, and I'm totally on board with that. I do believe that ingredient is not good for us. So this is what I buy. I've been using this stuff for I want to say like 7 or 8 years. I found it one day. I started researching into toothpaste, the ingredients, and because I used to get a lot of sores in my mouth from it turned out it was some sulfate that they put in, Colgate and stuff like that. It was aggravating my mouth, and originally I didn't really buy this toothpaste to get rid of the fluoride because I didn't understand anything, but when I started researching it more, this made a lot of sense. But it's called a Weleda salt toothpaste. First time you try it, it's going to be the craziest thing because it's like no other toothpaste that you ever had. It doesn't foam at all, and it is very fresh. It's a little more expensive than what you're going to pay for a tube of Sensodyne or Colgate, but it's a lot better for you because all it has in it is salt and peppermint. And when you use this stuff, your mouth is going to feel like it went through the best clean ever. It'll feel like you went through an oral washing machine. It's incredible. You can get it on Amazon. I'm not sponsored by them. This is just because I believe in this stuff. I think it's good for you. It's healthy. It's not abrasive to your teeth. Here it is. It's called Weleda Salt Toothpaste. You can get it on Amazon. Some other places, by the way, are expensive. I mean, you can see this stuff for as much as £7. But if you look online, you can usually find, like here, if you do the subscribe and save, you can get it for $3.91. There's other websites online that offer it for cheap too. So, Jonathan, I applaud you for getting rid of the fluoride. I think it's a great thing to do for your health, and that toothpaste is really, really wonderful. I have not had any problems with fillings since I started using it, whereas when I had been using off-the-shelf toothpaste before, I had issues with cavities. I used to get them. I didn't know why. I was cleaning my teeth well. I don't know if that's related or not, but I can tell you in 7 years I've not had an issue with cavities at all, and glad to be off the fluoride. Anyway, that was a lot today. 3:33 here in the US, so 7:33 where you are in the UK. Yes, I'm going to let you go tonight because it's way past the 1 hour, but thank you for joining. I'm sure you have some interesting comments about all the things I've spoken to about the Bitcoin, the stocks and whatnot. I can see a lot of comments from Mike in there. So let's see. Let's just have a look and see if you have any interesting comments. Hello, Annabelle Nyron. You're late to the party tonight, visiting your mum in rainy East Sussex. Nice. Able rate update on the platform today. Updated frequently asked questions. Yeah, I didn't see it. Big difference between a fiat currency operating on the same basis as national currency backed by assets and manageable and crypto. Big difference between a fiat currency operating on the same basis as a national currency. Yeah, I don't really understand that comment, but I would say, what is, if we take the US dollar, for instance, what is that backed by? Absolutely nothing. Used to be backed by gold, which, by the way, gold was gold ownership, I think Truman made it illegal at one point. But it used to be backed by gold, now it's backed by nothing. No evidence the El Salvador experiment has been a success. I think you could look at the price they bought Bitcoin at and the price it is now and say, yeah, it was a success. I mean, if you buy something at 50,000 US and now it's worth 69,000 US, that's a success. Especially when you've had inflationary issues where your currency is going in the pooper. But yes, anyway, look, do your own research, do your own due diligence. You could be a naysayer. I understand that. I get it. You want to, people will be naysayers about this thing. But like I said, just remember what happened with the euro. Anything is a very, very real possibility that one day fiat currency is no longer. And I personally believe that is going to happen. When? Who knows? But I do believe it will happen one day. And the people that will looked a little forward into the future and were able to kind of open their minds a little bit are really going to get paid off from that. And the people that thought, well, no, that couldn't happen, this is all nonsense, are going to be wishing that they would have done some more research and kind of looked at the real schematics of what this digital currency really is. We'll see. We'll see if I'm right. Anyway, thank you to everybody for joining. I appreciate it. Please subscribe to the channel if you're not a subscriber. I know some of you are not subscribers, but please subscribe if you can. Hit that thumbs up. Leave a comment. Tell your friends and family about the stream. Let's get everybody educated. And I'll be back next Thursday, all being well, at 7:30 p.m. UK time for another Financial Thing live stream. Have a great weekend, everybody. Enjoy. Hopefully it won't rain. And I'll see you next time. Take care. Bye.